What's up, ladies and gentlemen? This is DaviFX back again with another daily analysis video. And with these videos, my goal is to bring you confidence and to bring you clarity to your trading analysis, to your trading setups, and to your trading psychology. So basically, I do these videos every day. I really recommend you to subscribe to this channel, to hit that bell, so every time I come out with these videos, you don't miss them. And we do have some amazing price action lined up, and I'm sure you don't want to miss it, so stick all the way through the video and you see what I'm talking about. Let's move on to the charts. Okay, so as you can see, we did take some trades yesterday, and before I do any type of analysis, I want to share my analysis on those trades. So if you have watched my yesterday's video, you probably seen that I had this trend line right here. Let me kind of do this. So I had this trend line right here, and my analysis was, since we do have a strong level here, it has been respected multiple times. I do want to see not just momentum to the upside, but I really want to see the price break this resistance trend line to the upside before making any decisions. So if we go here, this is exactly what happened. We had this breakout, we had this retest, so my entry was like somewhere around here. We took this trade and it was just beautiful. London opened, it's smashed up, but right after it did hit our target 1, which was 1-to-1. Did I hit our target 2? Our target 3 was a little bit higher, but I said to my group, I'm scaling out before New York session. I do not like to have my full position or any open trades during the New York Open, because stuff like this can happen, and this is exactly what happened. Now, as the price was dropping down, as I said, I'm looking for either two scenarios: retest of this zone and then move up, and then retest of this zone and move up. Now you might be thinking, you are crazy because you said if the price ends up breaking below the zone, you're going to wait for the price to come down to the zone below, which is right here, before taking any longs. Yes, that is correct. But the one thing that I didn't like was this crazily impulsive move to the downside. This move to the downside is a clear, stop hunt, stop out, bringing all the kind of emotions towards the traders, because we're clearly in a very short term, I'm talking about short term, not the long term, short term, very bullish market. As you can see, we do have a lot of momentum going to the upside. So these type of moves to the downsides out of nowhere are just here to bring emotions to you, to your trading, to your analysis. And this is exactly what happened. So what I did, I kind of looked deeper into this price action, and I saw some resistance and support right here. As you can see, previously the price did the same thing. It had a big dip to the downside, but it eventually respected the zone and then moved to the upside. So I scaled down to the lower time frame and I started looking at this price action. What happened was, we did respect it, we did broke below. Actually, this is where we entered, right at the bottom. So we are in this trade. It went right into drawdown, but it didn't stop us out, and then it started moving up. So actually my entry was right here. We didn't get stopped out on this trade, and as the price was starting to move up, we see more and more building, momentum of building. I actually realized that I was right when I was talking about that this movement to the downside is out of nowhere, and it doesn't have a reasoning or meaning. Now let's go down to the lower time frame, and the price started moving in this triangle formation. So another thing that I did, I went on a daily time frame and I saw this wick. I hope you guys can see it, because I watched yesterday's video and sometimes you couldn't see my wicks. So I want to make sure you can see it. I think you can see it. Was this wick right here, this daily wick. And why I really like this wick is, let me give you some educational tips right now. For me personally, the key levels are not where the price had the most reaction, right? So for example, this would not be a key level for me. The key level for me is where the price had the strongest reaction. So for example, if the price was moving up like this, and then boom, and then boom, big move to the downside, this I would count as a key level right here. And this is exactly why I use this daily, because as I just explained, the price was moving up. It formed this wick before this dropped to the downside. So I thought this price area is really significant. Now we drop down to the lower time frame. I'm going to show you how this level was respected in the future. Now we can see that the price was respecting this level here, multiple times. And since we're still in this trade, like I still have around 30% of my position open from this setup from yesterday, because I do not prefer leaving my trades open overnight. So I tend to close most of my position if I have to leave overnight. Now the price came down to this key level that I have, and also formed this triangle. As you can see, these trend lines. I want to delete this for now to make it more clean. But one thing I don't like is, honestly, personally, I do not like triangles, because with triangles it is very tricky, because there are many times where the price moves in the triangle, has a breakout to the one side, and then just continues to the upside. Now this is what I don't like. If the price were to break out this triangle, somewhere around here with the slow momentum, and then start moving up, I would like that. But since this breakout is pretty early, as we have some room here, and it is pretty impulsive, I don't like about it is that it's gonna get everyone excited. And when everyone's excited, it's where the shit crap, sorry for my language, but shit crap price action happens. So this is why I'm not in a hurry to enter this trade right now, because there could be a potential that the price can go down, and then start moving up, forming a lot of fake outs, getting a lot of traders out of their trades before moving up. Now, also potential scenario, I'm still keeping that in mind, that we still have the zone below, and NFP is tomorrow, NFP is not today, so we still have some time to move a little bit lower, and potentially move significantly higher after the NFP. Honestly, I don't like the price action. I don't like the price action at the moment. I like the price action overall. I don't like the price action at the moment. We obviously see that we are in a really choppy zone, a lot of fake moves, ups and downs. And if you do follow my analysis, this is exactly what I said in my stories. You can go to my Instagram and you'll see, go to the highlights where it says words, go all the way back, and you'll see what I said. I said in these type of market conditions, when the market is very low and everyone is very excited to start buying, this is what happens. The price overall is moving up, but from time to time it has these big dips. So this is a psychological play by the markets to get as many people out of the markets, and to make them scared that these big dips is the time where the downwards market continues, and this potential retracement is over. But it's just basically a stop hunt, play, a psychological play for all the traders to get out. And this is exactly what we see in these current market conditions. We did see it here. We did have a lot of dips to the downside, dips. Now, we had a strong rally after we stopped out a lot of people, or got them out. Now we have one spike, second spike, third spike. There's a lot of spikes. Now, Overall, we're moving up, but I am still considering that we are in this retracement, and this can go on as long as it wants. I want the market to break some key structures. One of the key structures is this, the second key structure is this, the third key structure is this. So if we break above this, this brings my confidence a little bit higher. We break above this, this brings my confidence a little bit higher, and so on and so on and so on. But so far, I am not too confident to enter the long positions just now. We'll see how it goes. Maybe these structures continue breaking with a lot of momentum. Maybe we'll find an entry. And this is what I have for US 100. Now gold, stick with me. Stick with me because I do have some interesting news. Now yesterday I did a human mistake and I had these three zones right here, and I said I was bearish, but I later on the day after I posted a video, I was looking at the charts and I realized how could I miss it. We do have a very strong weekly support right here. This is a weekly time frame, so as you can see, this has been holding for a very long time, for many weeks. This has been respected for a long time. And what happened yesterday, the price did come down to this level right here and had a strong reaction. Now stick with me, this is gonna be interesting. We did have this reaction of this weekly support, right? But let me drop down to the lower time frame. Now once again, where everybody is excited. Oh, we do have a lot of momentum. We do have higher highs and higher lows forming. It's time to buy. Not yet. And let me tell you why. If we go down to the bigger time frame, we can see that yes, we did have a bullish market structure of higher highs and higher lows, but lately, after rejecting of a weekly resistance, we are currently in a bearish territory. As you can see, we do have lower lows and lower highs. So I want all you watching not to get faked out by this move. Now, this could definitely move up. This could definitely be the start of the rally to the upside. But I want to keep you keep in mind that we are still in the bearish structure. We're still in the lower lows, lower highs formation. Now, if I were to look for entries, I will tell you what I'm going to be looking at. This is the time where, for me personally, the gold is in a no trade territory. What do I mean? I mean that overall higher time frame, we are bearish. Overall lower time frame, we are bullish. So we do have two key structures. One is this and one is this. And this, where we are right now, for me is a no trade zone. And let me tell you why. Because if this ends up breaking, that means we invalidate this bearish structure and we can continue looking for longs. But if this right here ends up breaking below, that means that bears are still in control and we can start to look for shorts down to this weekly or even lower. So at this moment, the price can do anything it wants, and there can be a lot of stop outs and fake outs. We can move this, we can respect this, we can drop here. And for me personally, this is no trade zone. But once one of these happens, these are going to be really high probability setups. So I want you to keep that in mind, and I want you to stick with this analysis and my opinion. All right, guys, so that's all I have for today. If you haven't yet, once again, click that like button. We need those likes. We need those algos to push our videos up. Hit that bell so you get notified every time I post it. Thank you for watching, and I'll see you tomorrow. Peace.